Kenya's leading telecommunications company, Safaricom, has reported a decline in profits for the financial year ending March 31st, 2023. And South African rand plunges to a new 2023 low versus the US dollar. And Tanzania and Netherlands sign MOU to boost horticultural exports. Those are the headlines today. Let's kick off now with the markets. Let's see how it's looking on the African continent. We see it's mostly negative sentiment on the African continent, just like yesterday again. We see the NGX there trading up 0.04%. That's the only positive at intraday with the markets we track right here in Africa. With South Africa GSC index, that's down 0.45%, and the EGX 30 in Egypt as North Africa, that's also down 0.70%. Big down there for the EGX 30. Wonder how it's going to close at the end of trade, while Kenya closed negative, down 1.55%. Yesterday, holding that 100 point level for the all-share index, just as you see behind me there, 1.55%, 100.51. That's the all-share index. That it closed at yesterday. Now let's get a sense of what's happening on the NGX right now. Joining me is Mr. Abdurrashid Bomo, equity trader, TRW stockbrokers. Great to have you on the show.
Thank you, Ladi. Can you hear me?
Yes, I can. I can hear you perfectly well. So how's the market looking at this hour? Which stocks are making the big moves now?
I think the big stocks are mainly from the I think the banking sector. We've seen Access Corp has done about 134 million today units, followed by UBA 100 million, then Jitco, Zenith 15 and 11 million so far. And one thing about all these stocks that have done this volume, they actually, except I think UBA is the only one still holding up. If you notice, all these banks have been rallying since last week when they marked down dividends. UBA has not really joined that rally. I think UBA's rally seems to be coming up late because GT, Zenith, and the others are actually on the downside on huge volume. UBA is about trade about 8.15 as we speak. Overall bid about 46 million and overall for about 14.3 million units now.
And we got that big news yesterday, Mr. Femi Otedola, the billionaire, is back in the news again. This time he sold about 2.8 million units of his Geregu shares. I don't know if anyone was expecting that.
Well, depending, the sale of the price, the sale of the share has not actually affected the price. Since the last rally we saw on Geregu, we've not seen any volume traded since that time until I think this week. We saw 1 point something million in two tranches. I think that was Monday and Tuesday. But that has not affected the share price. The share price is still trading out 290, and so far they've traded about, I think they've traded about 115,000 units lately. One good thing about stocks like this, when you start seeing volume traded, that means investors are beginning to see, they are beginning to get interest. Perhaps it might be the issues they had with transport, but we are beginning to see more people entering Geregu now, unlike before. There was a time it was like a ghost town, there were no shares traded, but now we are beginning to see some substantial volumes traded. I think with time, things will sort itself out because as we speak now, overall is about 69,000 units against 1 million units, right? And but volume trade so far is about 115,000 so far, which is actually good.
All right, so looking at that Geregu stock right now, is it a buy or, if you're still holding it, is this something you should be looking at offloading at this point?
Okay, let me give you one hint. There's a good spread on Geregu. What I'm saying is that the market price is actually 290 naira, right? The people actually buying at 262. and the best seller is 280. So imagine that scenario. Look, there's already a spread of almost 30 naira. So if you are keen at 262 and they give you Geregu at 262, and the day you get market to sell your Geregu at 280, there's already a spread. It's just time with time, but most people doing Geregu trades are actually trading at either 262 or 280. I think 280 was actually the last price that was traded, which was about, I think they traded about 3,500 units at 280. But you can imagine all that period Geregu was on full offer. A lot of people actually bought those shares at 2 naira, 260 something naira. So there's a spread already. If you buy at, if they give you, that's the word to say, if they give you at the current price, you already have the spread of about 20 naira or to 30 naira. So depending on how you want to trade it, but if you want to hold it for a long term, well, price appreciation has been good from beginning of the year, from 100 naira to about 300 naira. And for us that we call ourselves bargain hunters, we look at that spread. You see such spread in stocks like Geregu, Nestle shares, you know, those big players, Danstem, MTN, you see all those price differential. The only difference is that sometimes those rallies takes time to actually move. So you have to wait for the next rally if you want to do that. But I think for me, Geregu, it's a buy in terms of this spread that we are seeing on ground.
All right, that's a buy for you. Now, let's look at the all-share index, some technical analysis now. What key levels are you looking at?
Yeah, what I noticed is the peak of the market, right, was around the period of March. Well, now, if I'm drawing a trend line, period of March, we saw market peaking to about 55,000 points. Then the market came to about 54, went to about 54,900. What the market has been doing lately is that the market has drawn a line from 55 till date. Yesterday's turn, right, actually coincides with that resistance line. The market is in what we call a downward channel. Now, those resistance are still intact. Now, the support, if we want to be sincere, if the market does any correction, then we'll be watching around 51 to about 50,000 points if it gets there. But if the market can break this current level, then we might see a new trend in the market. And that's why you are seeing it now, even the market is taking, you can see most of the indicators you are seeing is actually in red. Most of the indexes are in red now. You know, the ASI, the NGX 50, the banking sector and everything. Most of them are in red now, except I think oil and gas and I think 30. So I think at this period, people are beginning to take profit in terms that we are within resistant levels. So it happens. The market is still bullish because what we are seeing, this momentum we've seen lately, in anticipation of, we saw a lot of investors actually reinvesting their dividends. You know, so those are why we saw all those volumes traded. Access Corp was marked yesterday, so we still, by the time they pay on the 24th of May, I think we might see some more funds entering the market. But in terms of technicals, the market is in a restart region. I don't see any breakout for now. So it's going to be more of, let me use the word, cautious trading.
Cautious trading.
Traders, but not for investors. For traders, not for investors. Because if you look at the percentage, what these banks or what these companies have done this year, honestly, I mean, the market is still on sales. I mean, check out stocks like Zenith, UBA, Access, GTB, is more than 10%. They've done so well in terms of payout, you understand? So they've done very, very well. But in terms of in and out, we should be safe. We should be cautious now.
All right. I guess it's time to get your safety kits out for this market right now. Thank you so much, Mr. Abdul Rashid Momo, equity trader at TRW Stockbrokers. Thank you.
Thank you.
All right, let's flip on to the Middle East now. See the markets there, mixed pictures. That's what we're seeing in the Middle East. UAE, negative sentiment with the Abu Dhabi index, that's down 0.54%. While the Dubai index there, that's also down 0.24%. Still within the region. Saudi Arabia, that's up 0.54%, while the Qatari index is also up 0.12%. We're looking out for how these markets actually close at the end of trade today. Let's move on to Europe now. See, Chinese shipping giant Costco is buying a stake in the port of Hamburg, Germany. But what looks like just another business transaction was actually highly controversial. Let's talk to Lars Holter right there in Berlin. Great to have you, Lars. So what can you tell us about this deal?
Yeah, thanks for having me. It is a highly controversial deal indeed. Costco, one of the largest shipping companies in the world, wanted to acquire a 35% stake in the Tollerort terminal in the port of Hamburg, and the company promised to make Hamburg its preferred shipping hub in Europe. Sounds good at first, and some very influential people supported the deal right away, including German Chancellor Olaf Scholz, who is himself from Hamburg, and he knows, of course, how important the port of Hamburg is to the city-state and to its economy, and of course, an extension for the German economy as well. However, there were also plenty of people opposed to the deal. The simple reason shipping, the ports, just like roads and airports, that's all critical parts of the nation's infrastructure. And after watching China invest massively in infrastructure around the world as a part of the country's Belt and Road Initiative, and after watching how China created dependencies for many of the partners it dealt with, after all that, German politicians wanted to put a stop to it. They'd rather keep the country's critical infrastructure under their own control. And now there has been an agreement. Costco is allowed to buy a 29.99% stake, so that's just under 30%. So it's a little bit less than they wanted. That ties the Chinese company closer to Hamburg, secures the port's business there, but it doesn't hand over too much control.
All right, all about control right now, but what are the two parties of the deal saying about the agreement?
Well, they seem to be quite all right with the details, especially the port authorities pleased, because they had been very excited about the prospect of a Chinese investment for the simple reason that Costco had previously invested in other European ports. And Hamburg was worried that they could lose business if Costco couldn't get what they wanted in Hamburg. The plan is now to develop the container terminal Tollerort to become the preferred trading hub, where goods from China arrive to be then further distributed to all the European markets. And that's a lot of goods there. China is Germany's biggest trading partner, and it accounts for a third of incoming business in Hamburg.
And lately, German and other EU markets have dealt with a lot of talk about the continent, decoupling from China. What's the latest there?
Well, officially, the EU now says it does not want a decoupling, but a de-risking from China. For most experts, that means that the EU, and Germany too, will keep strengthening their ties with China as a trading partner, but that they're strengthening ties with other partners even more. That would lead to a situation where the continent would have valuable access to the Chinese market, who Europe obviously can't do without, but that we wouldn't depend on China as much as we do now, whether that is for China as a customer of goods or as a supplier of raw materials and such. And there is absolutely no question about the necessity of such a strategy. Over the past years or decades, Europe has become extremely dependent on China and is paying a price for that all the time. The latest trade spat now is over EU sanctions on some Chinese companies that supply the Russian army. China has immediately threatened to retaliate, and it's likely that they are mulling sanctions that could affect EU defense companies and, by extension, others too. Among those possible measures could be an export ban on rare earths, for example, which would be a huge problem for the EU again, and is really just another hint that we are too dependent on China.
All right, still a developing story. We'll keep tracking that. Thank you so much, as Lars Halter, right there in Berlin, giving us details from that port purchase. Well, we'll take a break now. When we come back, commodities market update is next. Just stay with us. Welcome back. Now we're looking at canned foods. Now, in the last 2 years, the price of a tin of sardine has spiked by 27.3% to 700 naira per tin. This far in excess of the rate of headline or food inflation. Joining me now is Halima Didiro, analyst, financial derivatives company. Great to have you on the show, Halima.
Thank you for having me.
So what is responsible for this big jump in the price of the commodity? And as we can see, demand is still growing.
Well, thank you. The first thing that is responsible is the inflationary pressure that we have globally, which is just tapering gradually now. So it has made most of the central bank to stay hawkish, and it has fed into the cost of borrowing for manufacturers and investors, which will be factored into the price of finished product. So, and we should not forget that tin sardine is an imported commodity. So, because we already have a rising price in the economy in which the commodity is being produced, so when they are being imported into Nigeria, it will feed into the price that it will be sold in our local market. So, and aside that, tin sardine is one of the commodities that cannot access forex in the official window. It is listed as one of them by the CBN in order to encourage local production. So economic agents in this line of business will have to source for forex in the autonomous markets. And that means that there's a depreciation year to date of about 3% in that window. So this will also feed into the price of the tin sardine. And also we have the tariff and the port duties that is also affecting it. But with all these things, we still see that the demand for tin sardine is growing. Why? Because one, we do not have domestic substitute for it that is produced locally. And another thing is it's like a ready-to-consume commodity that can be quickly used to fix meal, and it can be used to take bread, cooked yam. So it is convenient for consumers to easily consume. So that is one of the things that is still making the demand grow despite the hike in the price of tin sardine.
Quite interesting. I don't remember the last time I had sardines, but it looks like Nigerians don't care how much this is going to squeeze their disposable incomes. They're still buying it.
Yes, they are still buying. And over time, we've seen that consumers, once they have a high preference or high taste for a commodity, they tend to be addictive or form an habit around it. So it makes the demand grow even as the price increase. Another thing that is very important is the proportion. What is the proportion of the demand for this commodity when we look at the total income for the consumer? So if the proportion that is taken out of the consumer income is very low, he or she will still continue the consumption despite the hike in price, because the proportion it is taken out of his income or her income is still very low.
And I wonder how much, consumers can still take at this time, talking about rising prices. But in 2020, the global sardine market reached a volume of about 3.6 million tons. Which countries are dominating, with this exports? And how can Nigeria actually key into this market?
Well, in the developed world, we have Japan, we have China, but when we come down to Africa here, we have Morocco leading the list of exporters of tin sardine, and they made around $581 million a year in the export of this commodity. And what have they been doing differently that Nigeria too can emulate? One is that they have a standardized policy for the market, which means from the harvest to the processing to the branding and to the packaging, they really standardized the process and the stages, and which has given them an edge in the market and has given them the growth of that brand over the years. And aside that, they are open to international markets, of which Nigeria too has that opportunity, but we've not been able to harness the opportunity over the years. And we also have the problem of water pollution, which is really a major factor or a major hindrance in our aquaculture sector, due to oil spillage in the Niger Delta region, which is causing some species of fish to go into extinction or even reducing their commercial quantity. So if we can look into some of the things that Morocco and other leading exporters have done in this space of sardine exportation, I think Nigeria would be able to do more in terms of revenue generation in that aspect of agriculture.
Yes, I guess we do need a lot of revenue coming at this time. Thank you so much, Halima Dediro, analyst, FDC. Thank you.
Thank you for having me.
So yeah, if you're watching that, you might want to go into that sardine business and make some cool profit with that much demand coming from Nigeria. All right, let's look at other stories now. We see a struggling state power utility, Eskom, is currently implementing scheduled blackouts lasting more than 10 hours a day for many households and businesses, with expectations for longer outages deeper into the southern hemisphere winter. Investor sentiment towards the rand has soared badly this week, pushing the currency to its lowest level against the dollar since May 2020 on that was yesterday, and until today. The rand is down almost 3% this week against the greenback, underperforming emerging market peers. And the rand was trading at about 18.94 to the US dollar, about 0.4% weaker than its Wednesday close. The dollar was marginally stronger against a basket of major currencies as traders assess the implications of slowing US inflation for the Federal Reserve's interest rate path. And Kenya's leading telecom company, Safaricom, has reported a decline in its profits for the financial year ended March 31st, 2023. The company's net profit for the year was 52.5 billion shillings, a 20.3% decline from the previous year's 67.5 billion. The drop in profit was attributed to higher costs associated with the tough business environment and company's entry into Ethiopia. However, Safaricom's total revenue increased to 310.9 billion shillings, as a 4.3% growth driven by the growth of M-Pesa revenue and mobile data revenue. And Tanzania and Netherlands have signed a memorandum of understanding to strengthen economic electronic certification for sanitary and phytosanitary processes in the Tanzanian horticultural sector. The MOU details specific areas of cooperation aimed at enhancing the acceptability of Tanzania's horticultural products in the global market. The signing ceremony took place at the Ministry of Agriculture in Dodoma and was witnessed by the regional agricultural counselor from the Netherlands Embassy and representatives from the Tanzania Horticultural Association. The cooperation is expected to create efficiency in agricultural trade, leading to more job creations and increased foreign earnings. And that's it on the program. Thank you so much for watching. I'll see you again tomorrow. I'm Ladi Williams. Bye for now.